Everyone's calling for a crash. Here's the twist. Ottawa real estate just defined the script. Inventory is up, sales have eased for the third straight month, and prices still won't budge. That's not a collapse. That's a trap for the underprepared. And with the Bank of Canada 0.25% rate cut, this is a fuse that just lit the fire. Give me 10 minutes and I will show you exactly where Ottawa's next move hits first and how to get in front of it. If you're new here, welcome. I break down the Ottawa housing market every month so you can move smarter, not faster. We're using the latest data right here from the Ottawa Real Estate Board, just released for September 2025. Let's start with the big picture. So what's happening with the numbers and what does actually means for buyers and sellers right now in the fall market? Well, as you can see, there's a total of 1,089 homes sold in September. This is down from 1,236 in Osgoode and 1,318 in July. So yes, sales are softening, but before you hit the panic button, remember, this is normal. This is a fall market. We're moving from the spring-summer surge into the fall slowdown. Historically, September always eases off as families settle into routines with kids going back to school and buyers hit pause before the winter listings return. Despite this dip in volume, prices are not falling. The average sale price, as you can see here, is $690,397, almost identical to August's $686,000, and actually 0.3% higher year over year. So that's your headline right there. Sales are easing, prices flatten, and demand is holding as it should. You might say, why is this happening? Because inventory, though higher, is finally bringing us into a balance rather than a complete collapse. Ottawa had 4,388 active listings in September. This is up from 3,971 in August. That's a massive 19.4% increase compared to last year. That's the highest September inventory we've seen in years, roughly 22% above the 5-year average. So you might be saying, okay, Liam, this is great. What does this actually mean? Well, buyers finally have more options again. Sellers cannot just sit at any list price they want and expect multiple offers overnight. You have to be priced strategically in this market. And the market, well, after years of extremes of the massive highs during COVID and then the lows, it's now finally balanced. Our months of inventory has climbed from 3.2 right to 4.0 months, which is textbook balanced market. Not for a buyer's market, not a seller's market, right in the middle. Balanced market are where strategy and pricing disciplines really matter. The homes that are now move-in ready, well-staged and priced within 2% of fair market value are selling fast. You may say, how did I just come up with that number of 2%? Well, the average list price to sale price in this market right now is 98%. So give you a quick example. You're selling your home for $500,000. You should be able to receive an offer 98% of that. So 2% of $500,000 is 10 grand. So the home should sell for $490,000 on average. Now, the game changer this month wasn't the sales data. It was the September 17th Bank of Canada rate cut. They dropped the policy rate by 0.25%, bringing it down to 2.5%, citing slowing global growth and easing inflation pressures. This only affects anyone who has a variable rate mortgage right now, but there is a long-term effect for the fixed rate mortgages when you're coming up for renewal. We've talked a lot in our videos of what this means because there were a lot of people that locked into 5-year term mortgages, fixed mortgages during those COVID days. So in 2020 and 2021, those are coming up for renewal. And a lot of clients I'm working with right now are thinking about that. How are they going to be able to afford this new rate? It's going to be up 2, 3, 4%. Well, this easing of the Bank of Canada overnight lending rate causes a ripple effect for all of the other banks to follow suit. So they bring down by 0.25%. That's why it really matters. We're seeing a lot of resilience right now in the Ottawa market, despite higher inventory. Add this rate cut, and suddenly, first-time homebuyers who were priced out of the spring market are back running affordability calculations. We got a call yesterday from a client who was really seriously hunting for property in the springtime, and they just couldn't afford it. And they were just getting priced out of the market. They're back at the table. Now, we're not out shopping with them right now. They're doing the wise, smart move and taking a look at the affordability now with this latest rate cut. Are they in a position now to buy? Also, with more of a balanced market, there's more opportunity and more choice for these buyers. Even a quarter-point reduction can save, on average, the Ottawa buyer roughly $100 a month on payments on a $600,000 mortgage. That doesn't sound huge, but psychologically, it's enough to push people off the sidelines and back into the game of thinking, is this the time to buy in 2025, or are you going to wait to 2026? Expect that effect to show up in sort of the November to December sales numbers as pre-approvals adjust and the sentiment improves. This isn't an instant like rate announcement was September 17th, September 18th. It's not like the phones are ringing off the hook, but what it does do is it starts the conversation. And as I shared, this will come into effect likely in about 45 to 60 days. We will see that impact with this adjustment. So far in 2025, Ottawa has recorded 11,025 home sales. As you can see, that's 3.9% higher than this time last year. That's important to note. Even with a slower fall, the year overall is outperforming 2024. Now, you wouldn't know that if you were at my listing appointment earlier today when I was talking with my client. It was just doom and gloom that they thought they were getting into. I helped share with them the data of what is actually happening in Ottawa. Not really what the media is putting out or the conversation between neighbors, but like, where are we actually at in this market right now? The average year-to-date price sits at $699,910. This is up 2.7% from 2024. And the total dollar volume of sales this year has already hit $7.7 billion. So if you add up all of the property in Ottawa, that amounts to $7.7 billion. That is 6.7% increase year to date. So the real estate market continues to be one of Ottawa's biggest economic engines, second only to the federal sector, which is overall local GDP impact. Now let's break down what this really means for you, like under the hood. So MLS Home Price Index shows the composite benchmark at $627,200, up just 1.1% year over year. But property type tells a really different story. You know, I'm getting a lot of calls from people owning condominiums saying like, I can't sell. My property's been on the market. It's priced well. But what does priced well actually mean? And what does the data say about the condo market? Well, the average condo price is $408,200. This is down 1.7%, so roughly 2%. The condo segment continues to lag. Investors are cautious, and first-time homebuyers often pivot to stacked towns and freehold property where there's more space. When we take a look at the single-family homes, the average single-family home is $697,200. This is up 1%. Now, they've softened slightly in momentum, especially in that $900,000 to $1.2 million range, where it's almost balanced, not seeing any increase in price at that point. The real powerhouse right now segment is the townhomes, up 7.8%. This is where the action is. Townhomes remain Ottawa's missing middle, bridging the affordability and lifestyle. They're really driving the stability right now in the Ottawa market when we take a look at the September 2025 data. So it's really a three-lane market. Condos down, detached homes level, and the townhomes are surging right now. Another trend worth highlighting is the new listings jumped almost 20% year over year, reaching 2,832 properties on the market in September. That's a major inflow of inventory, and yet prices haven't cracked. I'm really curious to see what the November data has and what relation that has on what happened in October. Be sure to stay tuned. What I believe is happening in Ottawa is we're still one of the most stable employment markets in the country. With the feds, we have tech and healthcare jobs, which are providing solid economic base. Even with more listings, the list price to sale ratio is still holding at 98%, which means sellers are getting nearly full ask when priced correctly. The average days on market sits at 23 days. That's up slightly from 22 days back in September of 2024. I use that statistic a lot on listing appointments, probably every other day. And one statistic that I use with a lot of my sellers is what is the average days on market? It's important to know, what is the data saying? What are expectations that a seller has, but what is the expectation of the given market of the length of time the property needs to be on the market until it sells? And right now, the September data is 23 days. So just above 3 weeks on the market is as long as your property should be for it to sell. Now let's zoom out and see where September 2025 sits in the bigger trend line. In 2020, Ottawa only had 0.8 months of inventory. That was like the peak frenzy. That was like the COVID good old seller days. In 2022, it jumped to 2.9 months of inventory. In 2023, it was at 3.3 months of inventory. Now, 2025, we're at 4 months of inventory. So what that means is there is 4 months of property on the market. So if there are 0 new buyers entering the marketplace, it would take 4 months for all of the properties in Ottawa to get bought up. Now, it doesn't go to 0 ever because there's always new property coming on the market and there's always new buyers coming on the market. But it's interesting to look at that. Back in the COVID days, it was less than 1 month of inventory, which means we were in a full-blown seller's market back then. Right now, we're in a balanced market. We're actually in the time of kind of that 2015 to 2018 levels. Very healthy, sustainable, and realistic. I think what's happening, if I take a step back and just reflect on what's going on in the market, in the trenches every day, talking to both sellers and buyers, showing property, talking to those that are looking at maybe downsizing or first-time home buyers. What's going on? It feels a lot worse than it actually is. And that's because we're coming out of such a boom, such a very fast-paced market 3 years ago when property was selling above list price with no conditions. It was just bananas. Now people have time to look at a number of properties and then they can go back into the property they actually like and make a good quality decision and not feeling pressured to just offer, say, 20% above list price just to try and stand a chance. Right now, I'm actively working with a buyer who's going back to see a property in Manotick for the 3rd time. Now, are they serious? Yes. Why are they taking their time? Because they don't want to just buy a property and then have to sell it in a year. They want to make sure it's the right choice. And that's what happens in a balanced market is you have time to consider as a buyer. But as a seller, you have to price well. Because if you're not priced well, you're just going to get overlooked. You can't be sloppy with your price. You have to be priced based upon the market. Looking at days on market, list price to sale price. How does the property show in relation to the other competition? What I'm seeing with investors right now is they're watching the condo sector closely. With a 0.17% drop in the benchmark price, doesn't sound dramatic, but it's a signal. The cash flow math still doesn't work downtown unless you're thinking of a long-term hold. There's so much new construction taking place right now, and a lot of that is for apartment rentals, not apartment or condo ownership. I predict these properties, if an investor can hang on to it or if a seller can hang on to it for 3 to 5 years, you're gonna do pretty well. So it all depends on your time horizon. If you feel you need to exit, you need to sell, you need to cash out, it will sell, guaranteed. It's just, will it sell for the price you're comfortable selling it for? And if you can hang on to it, I do predict you're gonna do quite well in about 3 to 5 years because I think there will be a shortfall of condos available in the market at that point. And my point to that and my reason behind it is there's just so much build right now on apartment rentals, not on apartment ownership. And I think there will always be demand for ownership. September 2025 reinforces Ottawa's resilience. Sales are dipped, listings have climbed, but prices, they're still steady. And with the fresh Bank of Canada rate cut and the balanced conditions, we're likely to see a subtle but steady rebound heading into the fall and winter months. Ottawa remains one of Canada's most fundamentally solid real estate markets. Stable jobs, growing population, and that even tighter missing middle townhome market that is just surging. If you found this update helpful, be sure to hit the subscribe button. I'll keep you ahead of the curve every single month with the latest Ottawa housing data and what it means for you. And if you're curious of like that micro neighborhood, if you have a property and you want to know what is the impact it's having in relation to the Ottawa market, reach out. I'd be happy to bring it down specifically to your market neighborhood. See, Ottawa is made up of tons of different micro neighborhoods. I just gave you a holistic view of what's happening in Ottawa, but be sure to reach out if you're curious of what impact this has on your property. And if you're wondering where all of this is headed, be sure to check out my next video right here, where I talk about the 2026 housing market forecast. I'm going to break it all down, the trends, what to be aware of, and what to stay away from. You're not going to want to miss it. Be sure to check it out right here.